Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone for all of your support on the channel. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. Today, I thought I would take a look at the difference between growth stocks and dividend stocks. There's been quite a few new viewers on the channel, new investors wondering what the big difference between the two types of stocks are and what kind of allocation should a portfolio have. So I thought I'd kind of dive into what a dividend stock is, what a growth stock is, and then what kind of allocation, at least what kind of allocation I keep in my portfolio. So we'll kind of go through a number of dividend stocks starting off. You can see up on screen here, AVI, ABBV. This is a very good, what I would consider dividend stock. And let's kind of take a look at the 5-year growth pattern. You can see this stock is up quite a bit, 156%. But typically over the longer term, a dividend stock will not have that kind of increase. And we'll kind of contrast this to the growth stocks as well. And by their name, you'll see that they have a lot more growth over time. A lot more risk, but a lot more reward as well. Kind of the rule, risk equals reward in the stock market. If we take a look at the statistics here, you'll see that this does have a very nice dividend yield, 2.72%. PE ratio is 28.149. And keep those numbers in mind when we kind of contrast these against the growth stocks, which we'll be talking about later. Another great dividend stock is Pfizer, another pharmaceutical company. You can see over the 5-year time span, 40.99% for rate of return. If we take a look at the statistics, 3.589% dividend yield, PE ratio 10.4. So very good dividend yield and a very good, very value-based PE ratio as well. Take a look at Abbott Laboratories here, another great dividend stock. We can see over the 5-year time span, 78.36% rate of return. And under statistics, 1.884% dividend yield and a PE ratio a little bit higher than the other two stocks in the healthcare field, 229.8. Let's take a look at some other industries here. Johnson & Johnson, you can see over the last 5 years, 71.96%. Dividend yield, very good, 2.376%. PE ratio, 333. Boeing, another great dividend stock, which actually has turned into somewhat of a growth stock over the last 1 year or so. You can see that tremendous performance here, 93.32%. Good dividend yield, 1.926%, and PE ratio of 25.155. Let's go over to 3M, another great dividend stock, 132.62% over the past 5 years, 1.997% dividend yield, and a PE ratio of 27. And really, as we go through these stocks, you'll see that they have very good dividend yields, typically in the 2 to 5% range, and they also have very value-based PE ratios or price-to-earnings ratio. I've done a few videos on what exactly that metric means, but really, it is an indication of how expensive a stock is. Please take a look at those prior videos for more detail on that. But you'll see that they have very good dividend yields, and the PE ratios are relatively low for their particular market industries. As we continue to scroll through here, Ford as well, this is one of my favorite dividend stocks. Over the past 5 years, it is down quite a bit from what the overall market rate of return has been. An S&P 500 index fund, for example, it's only up 3.21%. I do believe this stock is undervalued. I jumped in, majority of my shares, about $11 or so. Picked up quite a few shares when it dipped down as well. Here, 10.20 or so. So I'm going to hold this for the longer term. But I like this stock because it's a blue chip company. It's a large company. It's an entrenched company that's going to be around for another 100 years. It's got a great dividend yield, 4.8%. And the PE ratio is rock bottom low there. Is, as you can see, 5.7. And this is a very good PE ratio for this market industry. Now let's go ahead and take a look at some growth stocks for contrast. First, starting with Facebook here. Over the past 5 years, you'll really see the difference now between a growth stock as well as a dividend stock. And you can see 545%, much greater than any of the dividend stocks. But you'll also notice here that there is a 0% dividend yield. The PE ratio is somewhat higher than the other companies for this particular market industry. 30.8 is a little bit above the mean. Amazon, 5 years, 490% rate of return, exceptional. 0% dividend yield, and now you can see a very high PE ratio there, 248.7. Netflix as well, 1,284%. Spectacular rate of return there. This is really what characterizes a growth stock. Very high PE ratio, so relatively expensive. A lot of investors are jumping into the stock, expecting earnings to increase in the future to bring that PE ratio down. 0% dividend yield, and over the longer term here, an exceptional rate of return, over 1,000%, 1284. Google, likewise, as you can see here, up 88.6%. This is a little bit different here because, as you can see here, the company kind of changed its ticker symbol here, but a very good rate of return, and again, 0% dividend yield, and the PE ratio is relatively high for this particular market industry. And Tesla here, the last growth stock we'll take a look at, 496.19% over the last 5 years. If we take that out 6 years, this is up over 1,000%. Really coming up from almost nothing here, straight up. So a very good growth stock, but again, 0% dividend yield, and PE ratio for this one is essentially infinity because it has negative earnings. So positive number over a negative number, you can't really calculate that. That's essentially infinity, or exceptionally high PE ratio, as high as you can go. So that is what characterizes growth stocks versus dividend stocks. Growth stocks, much more risky. So with these companies, risk equals reward. These companies, for the most part, now are well established. But jumping into a Netflix, for example, 5 years ago would have been a very risky proposition. That's why these stocks have very good rates of return, because you're jumping in when they are fledgling companies, when you really don't know if they're going to take off like a Netflix would or an Amazon. Back in the late 90s, early 2000s, there were a number of companies exactly like Amazon. Those are all now bankrupt. Amazon was the winner out of all those companies of the dot-com era. And because of that, a very good rate of return, but a very risky investment, extremely risky investment. So that is the difference between dividend stocks and growth stocks. I typically have about 60% dividend stocks, 40% growth stocks. I'm somewhat more conservative with the portfolio. This particular portfolio here on Robinhood is much more risky, doing some things I don't do on my E-Trade or Vanguard accounts. I do a lot of index funds on those, but a lot of those stocks are also dividend stocks, and I'll be jumping into a little bit more of growth stock investing. But for the most part, I do like dividend stocks. They are solid stocks. Rate of return is a little bit less over the longer term if a company does take off. Again, for example, a Facebook, an Amazon, or Netflix. You can't always predict that. If you guys have any questions about the difference between a growth stock and a dividend stock, please let me know in the comment threads down below. I don't think there's necessarily any strict proportion that an investor should have. If you are more willing to take on risk, definitely have some more growth stocks in the portfolio. Over the longer term, you can be rewarded quite nicely. However, if you're a little bit risk adverse, I would definitely put a little bit more of your portfolio into dividend stocks. Yes, the rate of return is going to be somewhat lower over the longer term, but again, it's much more risky putting your money into growth stocks. There's no set formula, or there's no guarantee that your growth stock will turn into a Netflix, a Google, a Tesla, for example. And Tesla here could have easily went the other direction 5 years ago. This is still, I would say, a fledgling company. It still has negative earnings growth at the moment, so very risky to jump into this. But this stock could go to $1,500, or it could go to $50. There's no guarantee. Jumping into a growth stock, dividend aristocrat, dividend king over the longer term, definitely will be around in the future. So again, no strict proportion. I tend to focus a little bit more on dividend stocks, but again, just my risk tolerance. So yeah, just wanted to kind of go through that because a number of viewers on the channel were inquiring about the difference between growth stocks and dividend stocks and what my whole rationale was for jumping into growth stocks. Again, let me know if you have any questions down below, and until next video, we'll see you then.